Hi and welcome to another edition of our weekly market outlook report for the week starting Monday, the 6th of April. We have just left behind us a volatile trading week and a busy economic data calendar which kicked off April trading activity. It's a new quarter. We are heading into a slightly quieter week, which starts with OPEC meeting on Monday. On Tuesday, we should be on the lookout for RBA interest rate decision and statement. Going forward on Wednesday, the main points of interest are reserved for the FOMC minutes and crude oil inventories. On Thursday, we should be on the lookout for UK industrial and manufacturing production and GDP for February. And also US weekly jobless claims will be closely watched as well. The week will finish on Friday with China and US Consumer Price Index. Now, let's take a look at few markets. This is the intraday 4-hourly chart for euro-dollar currency pair, which is clearly downtrending. The price action is currently capped by falling resistance trend line, and it's also trading below multiple 20, 50 and 200 period moving averages. Key trading level is at 108.50, which is our support. If we see oversold bounce backs, they are initially capped by this falling resistance trend line and the cluster of these previous lows. Therefore, 200-day moving average at 109.81 spot 10 level. Very similar level that we were talking about before. This level keeps on repeating over and over again. Bears appear to be in control below that level, so oversold rallying to that level and a rejection or the loss of these current lows and a gradual move lower would appear to be bearish, potentially opening the way for an extension to the downside, targeting supports at 107, 106.50, possibly even 105, 104.90 to the downside. Alternatively, if you see a spike higher and a breakout above 1 spot 10 and in particular end of day close above 1 spot 10, a retest of that level from above as a newly found support would negate bearish outlook, potentially opening the way up for an extension to the upside, targeting additional resistances towards 1 spot 11.45, this high here, breakout above that level 112, nice and round number, and cluster of these highs from 16th of March. And additionally 1 spot 13, 1 spot 14.70. Sterling dollar is moving sideways in intraday 4-hourly time frame, looking for a direction. These type of patterns, they have the tendency to break to the upside. The current price action is capped by resistance at 1 spot 24 and supported by 1 spot 22. So bulls are hoping for a spike higher and a breakout above 124, at least the end of day close above that level, a retest of that level from above as a newly found support for an extension to the upside, targeting 127, 128, possibly even 130, 130, 160 to the upside. Alternatively, if we see a dip lower and in particular a loss of 120, 130 area, a retest of that level from underneath as a newly found resistance, that would change the bullish outlook, opening the way for an extension to the downside and retest of additional downside supports at 1 spot 19, 1 spot 18, 1 spot 17.70. Dollar Japanese yen, corrective pullback lower, and now we are looking for a direction. Normally these type of corrective pullbacks are looking for a support, and in our case, if we take the fib from 9th of March low and extend it to the current 25th of March high, it's giving us a 50% retracement at 106.90, which is this cluster of the previous lows. This one is nearly there, but definitely 2 touches here at that level as well. So this is a full retracement of this impulsive move higher. Bulls are hoping for a breakout above the current resistance at 108.85 and looking for an extension to the upside, targeting resistances at 110.30, 111.60, possibly even 113.20. Alternatively, if we see a rejection at this level and a gradual move lower and a dip of these current lows, that would negate the bullish scenario, potentially opening the way for a deeper retracement to the downside. Targeting initially 61.8 fib retracement at 105.70. Loss of that level would open the way for the retest of 105, possibly 104.50 to the downside. Gold is consolidating sideways. Interesting development is that it's capped by 1640. It was initially supported by 16 and 1600, and then we had a dip below here towards 1580, 1585. So the resistance at 1640 is still valid. We also have a rising support trend line. So if we extend this line here, connecting this sequence of the higher lows, that level around 1600 comes in play again as a major support to the downside. Bulls are hoping for a breakout above 1640 and at least an end of day close above that level, a retest of that level from above as a newly found support, which could open the way for an extension to the upside, targeting 1685, 1700, possibly even 1740 over a longer period of time. Alternatively, if we see a dip lower below 1600, that could open the way for the retest of 1585 support yet again. Only the loss of that level and retest of that level from underneath as a newly found resistance would change the outlook, potentially looking for additional push lower and retest of supports at 1560, 1555, 1540, 1530 to the downside. Lastly, let's talk about crude oil. A massive spike higher from the oversold levels that we saw. This was triggered by President Trump's tweet last week about potential production cuts and apparent agreement with Saudis and Russians. OPEC meeting on Monday will give us further clues, but we saw an oversold bounce back and a spike towards $30 per barrel. We have a falling resistance trend line. If we connect this high and then this high and project it, we are coming to kind of this area of resistance as a trend line. So the initial support to the downside is at 2720. So pullbacks into 2027 and a rally, or a gradual move higher and a breakout above 3150 is required for a bullish outlook, potentially targeting 35, possibly even 36.30 to the upside, which will be this kind of gap from 11th of March here. Alternatively, if we see a rally into 3150 and a rejection, or a gradual move lower and the loss of 2720, that would negate the bullish outlook, potentially targeting corrective pullback towards 25, 24.40, possibly even 23 to the downside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.